Hi, this is Jason Rarica with YellowWood Wealth Solutions. I wanted to talk to you today about something called a mega backdoor Roth contribution. Now I know that's a mouthful, but by the end of this video, you'll understand what it is, how it works, and how it can be a useful tool in your retirement planning. So let's start out with telling you what is a mega backdoor Roth contribution. Every year, the IRS allows you to have a maximum contribution in your employer retirement plan. Now that's different than your employee contribution that many of you have probably heard of. The IRS maximum contribution limit in 2022 is $61,000. And that is comprised of your employee contribution, which is maxed out at $20,500, plus an employer contribution if you're fortunate enough to have one. And then there's a gap. And within that gap, sometimes you can make a contribution into a retirement plan that's called an after-tax contribution or a non-qualified contribution. It's the same thing, just different words that are used. Not all plans allow for this to happen, but if your plan does allow you to do this, then you can make that additional contribution in an after-tax form and then convert it to a Roth to complete what is the mega backdoor Roth contribution. So I know that probably sounds a little confusing still, so let's go through an example. If you're under the age of 50, and let's just say, to keep the number simple, you make $100,000 a year. Your maximum contribution that you can put in is $20,500. Now let's say, for the sake of argument, your employer gives you a 5% match. So that would be an additional $5,000 in your plan at that point, for a total contribution between your employee contribution and your employer contribution of $25,500. If the IRS maximum contribution limit, though, is $61,000, that means we take that $61,000, subtract the $25,500, that leaves you with $35,500 that is eligible to be put into a after-tax contribution, or like I said, sometimes called a non-qualified contribution. Now, if you're over the age of 50, you have what's called the catch-up contribution. So let's use another example. Let's say you're over 50 and you make $250,000. That means if you put in your maximum contribution, you can do your $20,500 plus your catch-up contribution of $6,500 to get you to $27,000. Now let's say your employer also matches 5% again. That's gonna be an additional $12,500 for a total of $39,500. Now you might be wondering, does that maximum IRS limit change if you're over the age of 50? And the answer is yes, it does change. You don't get penalized because you made a catch-up contribution on your end that the limit doesn't go up. So it does. So your IRS maximum contribution limit, if you're over the age of 50, is actually $67,500. So in this example then, if we took the $67,500 and subtracted from it the $39,500, that was your contribution, your catch-up contribution, and your employer match, that leaves you with an additional $28,000 that would be eligible to be put in the after-tax or non-qualified contribution. So now that you know what it is and how it works, there is one feature in there that you need to be very, very conscious of, and that is putting the money into a non-qualified contribution or an after-tax contribution doesn't necessarily put it into a Roth. You have to elect to do that. So in order to do that within your employer plan, they may have a button that lets you create an automatic conversion. That's a really nice feature to have. That means that when you make the contribution to an after-tax amount, it'll automatically convert over into a Roth. That way you'll have no tax consequences because you've already paid the taxes on the way in. It makes the conversion immediately, no tax consequence. Now, if your plan does not allow for an automatic conversion, you'll have to go in manually and make that conversion. Now, that can be a lot to do every month, so we most often see people do it on a quarterly or an annual basis, but you'll have to go in and actually click the button to make that conversion happen. Now, this type of a conversion may not be completely tax-free. And the reason that is because if you put in, let's just say for argument's sake, $10,000 into the after-tax contribution. And then from the time you contributed to the time that you converted, it made $500 in gains. Well, those gains had never been taxed. So what happens is you make the conversion, your $10,000 that you put in, tax-free conversion. The $500 is going to be taxed at ordinary income tax. Now, if you're in a position where you can make a contribution to a mega backdoor Roth, you're probably not going to be worried about that type of tax. But it is something that you need to be aware of and that you need to be diligent in making sure that the conversion actually happens. So I hope you understand a little bit better about what a mega backdoor Roth conversion is, how it works, and how it can be beneficial to you in your retirement planning. If you'd like to talk about this more, or if you don't know if your employer offers this type of contribution, reach out to us. We're happy to make a call to your employer's retirement plan to figure out whether or not you can make a contribution to a mega backdoor Roth. And if you know anybody that would find this video helpful, please feel free to pass it along. Thanks so much.